Inflation on the rise again. After 3 months of decline, the UK inflation rate climbed to 2.3% in October. I think what we need to look at really is inflation actually good for landlords? So, market wrap 232, Stuart Williamson at the helm. So what are the key points at the moment? What was the situation? The inflation rate was up to 2.3%, up from 1.7% in September. The government is saying that it is because of rising energy bills. The impact of energy bills is basically that the price cap went up by 10% to £1,717. And again, we're going to have another rise in January, which will put it up again to £1,736. Consumer prices have gone up. Gas and electricity costs increased by around £149 for typical households, but other factors like lower oil prices and cheaper live music tickets help balance inflation. Overall, core inflation, excluding energy, food and alcohol, rose from 3.2% to 3.3%, and that was driven by higher airfares and the services section, hotels, air travel, that sort of stuff. Forecast could well be that inflation is going to be above 3% for the whole of 2025, which is a lot higher than the Bank of England's 2% target. And this is why? Because it's largely on the basis of the government's budget spending of 70 billion and also global trade tensions. Who knows what, with Donald Trump back in power, what's going to happen in the US. The thing I just wanted to go through, though, a caveat there, is actually CPI, the Consumer Price Index, is the wrong index of inflation to look at. It doesn't include housing costs. We should be looking at CPIH, which is the correct indices as stated by the OBR and the ONS. And if you look at those figures for this month, the real driver of inflation is owner-occupier costs, which do include energy, but also rental costs and mortgage costs, which have all gone up and are up by 7% on the month. Why is this? Now, we talked about the energy cap just a moment ago. Basically, the government says, okay, energy is going to be capped at this. So what do the energy companies do? They don't go, oh, we don't need to increase it, we'll keep it as it is. They take it up to the cap. And now the UK is the only country in the EU that does that. And it means that we are paying twice as much as Germany and France for our energy, and actually 4 times as much than the US is doing. So basically it's a cartel, and it's all rigged. It's price fixing. You know, it wouldn't be allowed in sport, it wouldn't be allowed in any other sort of arena. So why is the government colluding with the energy companies to do this? So there's a lot of underlying things. And why are they talking about it being energy prices that are pushing up the CPI or CPIH? They're doing that basically because they're trying to hide the fact that their policies have forced up interest rates and are forcing up the cost of living, which is a mistake of the government. So what's been the Bank of England's response to this? Basically, they had the recent rate cut, 4.75%. Actually, some mortgage rates started to go up on the back of that. And it probably means that because of the government spending at 70 billion, that we're not going to get another cut this year. And in fact, the next cut will probably be in February. Generally speaking, the pundits are saying that we're probably going to be looking at a cut every quarter next year. So interest rates should be down to, say, 3.75 or 4% by the end of next year, which as buy-to-let investors means we'll be at about 5%. So it will be a positive step. So if I was going to fix or float a rate at the moment, I think I would leave it on a floating rate and think about fixing it in perhaps 12 months or 18 months' time, get a fixed rate then. What are the implications of these? Is inflation increase on the property market? Higher inflation typically means that interest rates remain higher for a longer period, which is what we just talked about, which that impacts on mortgage rates. When inflation is not at crisis levels, rising household costs and slower rate cuts may dampen short-term property market momentum. And that is definitely the case. I think we will see less activity because people are more cautious again. So let's just think about it. If inflation does go up and continues to be this up and down, or you can get into a crisis point if you have more escalation in the Middle East or more escalation in Ukraine, is buying property actually a good hedge against inflation? What are the arguments for that? The general perception is that property is a good inflation hedge. Putting aside the many nuances of residential property though, such as how long you're going to hold it for, what are your borrowing circumstances, what's the location. We actually looked at the numbers over the last 60 years, okay, right back to when I was born, and just under 50 years in the US to explore this question. And the Investment Property Forum, which is a well worth reading and go on the internet and do some search on them, said yes, UK property, based on those figures, and to a lesser extent the US market, delivers positive long-term real returns and can be an inflation hedge. But in a strictest sense of the term, hedge with returns moving at the same time as inflation or reacting to it is not always successful. So we need to throw rent into that. And if rents are generally positive, then it is a inflation hedge. And that's what we're seeing. Rents in the UK, because of the lack of supply, as we covered last week, 4.3 million missing houses, rents are going up, and that will mean that it will property prices will stay ahead of inflation in the UK over the medium to longer term. If we look at the rents and inflation together, an analysis by the OECD's rental index over the last 60 years shows that annual rental growth has exceeded inflation in 71% of periods, looking at quarterly data in the UK. So that is what's happened over the previous periods. But the point is, we're in a completely different situation at the moment, where the lack of supply is absolutely extreme and immigration is huge. So it will be a positive time to hold property as a hedge against inflation, as opposed to holding cash or potentially bonds and so on. Overall, if we drill down decade by decade, in the UK it has only seen one negative average real yield, and that was in the 1970s when inflation was at 12%. Even in the 80s, when average inflation was 6.6%, nominal yields were at 7.4. So history tells us that inflation can be hedged against using property, and it's a very good approach. So if inflation is going up, if you're a landlord investor or a purchaser of property as an investment, it's a good thing to be doing to keep your money's real value. And that's what we're talking about here, is maintaining the real value of your money. And when I first bought my first property, the mortgage was £48,000, and at the time that was a king's ransom. I thought I'll never be able to pay that off. Luckily I didn't think much at that age, so it didn't worry me too much. But now, I mean, £48,000, it won't get you that posher car. You know, cars are more expensive than that now. That's the purchasing power of property, of money being devalued. So you need to keep up with inflation, and if property does that, then that's a good thing to invest in as a pension, as an investment for the future. So inflation, is it the end of the world? Not if you're in property, I don't believe so. And it's not that big a worry. It is a worry if you come in to invest in, if you're going to be buying your everyday foods and the Mars bars are shrinking and the price is doubling. So what interesting comments did we have this last week from a gentleman called Gavin Speeby, 8304, says, UK is slowly dying, I'm afraid. There'll be no big comeback from the recession next year. And I think that's mixing up really the value statements. The value statements are really, is the UK in decline? At the moment, it is. Is the UK property market in decline? No, it's not. So they're separate things. So you have to be clear on what we're talking about here. Another quote we had from last week, how will we ever get enough builders to build 300,000 homes each year? Good point. That's Phil Ewan. It is very good. I don't think there's enough incentives out there or enough land to do that, even if they readdress the brownfield sites again. And finally, from T. Davis, never a better time to be a landlord as long as your property is of rentable standard. Absolutely. If you buy a rubbish property, you will get a rubbish tenant. They'll not respect you as a landlord. They won't pay the rent on time. They won't respect your home. It won't carry on appreciating value. So buy in a good location and get a good tenant. They're crucial things. So that's market wrap number 232 for this week. Thank you very much. I hope you find it useful. Do comment, like, subscribe, and if you'd like more information, do get in touch with us. Thank you very much.